Hi there, I'm Dean Heskin, President and CEO of Swiss America Trading Corporation, and you are tuned into our podcast entitled The Secret War on Cash. And if you weren't aware already, you are now. There has been a war on our cash, your and my cash, the money that we make, the inflation that affects it, the decisions policymakers make. Quite honestly, we're really in the midst of a mess right now. I don't have my normal co-host with me today. I have a special guest, Dr. Jerome Corsi. Good morning, Jerry. How are you doing today?
Dean, it's great to be back with you. I really enjoy these discussions. I'm looking forward to it.
Well, it's great to have you here. And Chris is actually with his family on holiday right now. So as I was talking to our producer, CC, couldn't wait for an opportunity to have you back. So welcome, and let's get right into it. We've been talking, Jerry, on our podcast pretty extensively, I would say, about what's been happening with this alliance that's been formed called BRICS. And with the BRICS, and I know that that's something that you and I have talked about in the past, there's this whole, I guess, it is an alliance, and these countries who are getting together that are forming this union to establish what they're referring to as a de-dollarization. Now, this being said, what kind of has been lost in the shuffle a little bit is the central banks. And the central banks are all part of that same equation. The allure to BRICS has been that they are talking about issuing a currency. And we're not talking about BRICS per se in this segment, but there's a relationship here, in so much as that in one of our earlier podcasts, we noted the fact, or cited the fact, that the BRICS nations are actually comprised of several of these central banks out there. Now, the bottom line, central banks, as you see in this first article, they're in the process of purchasing gold to offset their own money destruction. So that sounds to me, just by the title alone, Jerry, that they foresee there's a problem out there. They are taking some proactive steps or measures to make sure that they're going to be, as best as possible anyways, insulated from this problem. So when they're talking about their own money destruction and their purchase of gold, tell us a little bit more about what these central banks are doing and why they're doing it.
Well, it's a very important point, and it's not entirely understood. Now, first of all, Russia's declared that in this October 2024 meeting of the BRICS summit, it's going to take place in Russia, that the alliance is actually going to be talking about a de-dollarization agenda. Now, what that means is they're moving away from the dollar. They're going to create their own currency or their own currencies. But you can't just do that out of thin air, or you've created another fiat currency. So the responsible central banks in the BRICS nations are stockpiling on gold because they can buy it now, and it's increasing in price, but it's still an enormous bargain given where gold's going to go. I mean, gold's now $2,400 an ounce. I'm sure they've been buying it increasingly since gold was under $2,000 an ounce. And when you look at the percentages, that you're seeing that gold has outperformed the S&P 500, the stock 600 in Europe, a lot of these global indexes. So if you begin to stockpile gold with the fiat currency the BRICS nations have, they're cheaply buying an asset that, when they go to de-dollarizing, allows them to have a hard currency backed by the gold that they bought relatively cheaply. So it's a very effective strategy, and it's front-running a policy which we are not adopting. But if the central bank's purchase of gold goes back to J.P. Morgan when he said gold is money and everything else is credit. Now, if you can get money at inflated fiat currency prices, you got a deal. And the BRICS nations, I think, are preparing very quickly to have a major de-dollarization impact. At the same time, our debt on just the interest on our debt is now over $1 trillion a year. We're spending an enormous proportion of our income tax receipts just paying the interest on the federal debt, which is approaching $35 trillion. So we are destroying our currency where these BRIC nations are creating real value, which when our currency is at bottom, they're going to be able to come up with one that's very strong, backed by gold.
Right. You know, and I found interesting in this article, Jerry, they make a point of saying that what these central banks are doing does not represent a full de-dollarization. And for those tuning in, you can see the take a look at the link in your um, episode description there. And for those of you who are watching this online, you can tap on the link. But what's interesting about them saying that is, by and large, that term de-dollarization has been used extensively by this BRICS alliance. I mean, it is a BRICS term, in fact. So I found it interesting that they're trying to stress the fact that this is not a de-dollarization effort. And it's kind of like it's kind of like they say to me, this topic, central banks, BRICS, it's like what they've always said when I was growing up. How do you know if what the real truth is? Whatever the government's doing, do the opposite, basically. And the fact that they're denying this would lend to the fact that this probably is a de-dollarization effort. And that's why we've really, on our podcast here, been more and more incorporating the central bank aspect into BRICS, because even as BRICS is its own entity, the central banks is part of our domestic US economy. The two of them go hand in hand. And when you see this kind of a move or an effort by the central banks, and they're talking about some of the ramifications, and we've been talking about some of the ramifications that can have for the dollar, it could be devastating. And as we talk about gold, and I'll get right into our next article, as the central banks are buying gold, the market for gold just seems to be heating up each and every day more and more. And in this article that you'll see now, with gold prices, I think you'd mentioned in the earlier part of the show, gold prices at levels of about 2,400 an ounce. By Q4, Morgan Stanley sees gold prices hitting $2,600 an ounce. We've had several forecasts given by others out there that would suggest by year's end, and I would say at a minimum, many of these forecasts have said by year's end, we'll be looking at gold prices in excess of 3,000 an ounce. So do you think with what the moves of the central banks are, with what's going on with BRICS, do you think that these forecasts for gold are consistent with what we're going to see, meaning that there's any accuracy to it? Do you think this could definitely soon become a reality?
Oh, I think it's becoming a reality. I think $2,650 an ounce, $2,650 an ounce by quarter for 2024 is low. I mean, look, we're at $2,400 now in July, and that's a massive increase from the beginning of the year when gold was under $2,000 an ounce. I can remember times it was more like $1,800 an ounce. So when you see the statistics and begin to look at it, I mean, the biggest buyers of gold right now are the People's Bank of China and the Central Bank of India. Now, they're both BRICS nations, and it may not be full de-dollarization, but China has 4.6% of its total reserves in gold. They still hold a lot of treasury bonds, but what they're planning to do is to raise their gold reserves to 14% by the end of the year. Now, that alone is going to put a lot of pressure on gold, more than I think $2,650 an ounce. And if India follows, you're going to see kind of below the surface, because the BRICS nations have not until recently been considered major movers in these markets. But, they're being followed by the Bank of Kazakhstan, the Bank of Singapore, Bank of Qatar, the Bank of Turkey, Bank of Oman. All these banks are following what the BRICS nations are doing. So, they're balancing out their central bank balance sheets, moving away from the volatility on holding treasury bonds and treasury bills to holding more gold. And that's a clear sign that they're moving in de-dollarization, even if they don't want to indicate and signal it. They're headed there. And the pressure on gold is only going to intensify through the remainder of this year.
Well, and I couldn't agree more. And it's, we've been covering this just through the podcast alone. I mean, personally speaking, I've been in this market now for just over 32 years. So I've been covering it since gold was as low as $225 an ounce.
Right. I,
And
I can remember. I mean,
and you know the story that we tell, it never goes out of style. It never gets old. And I say that meaning we advocate people just be diversified. There is a lot of turmoil out there in our financial markets and on our economy. There are a lot of unknowns, and never before has there been a reason to have a well-balanced portfolio as there is right now.
I,
Metals being a perfect part of that, which just so you know, Gary, for years and years, we would advocate having metals just as a insurance policy, something just to make sure if things went bad, you had something to fall back on. But it's not only turned into that insurance policy, it has literally turned into one of the best performing asset classes out there.
yeah. What I've always liked about Swiss American, Dean, I've been with you for over 20 years now, is that the purpose is consultative selling, and it's about precious metals strategy. It's not about buy gold, buy silver. It's a strategy. So, for
Right.
instance, my audience loves this, walking Liberty half dollar offer, silver, like over 99% silver, because with silver trading at about $30 an ounce right now, it's going to go to $60 an ounce a lot faster than gold at $2,400 an ounce is going to go to $4,800 an ounce. So if people want to just make sure they don't have to be having huge amounts of money, but they want to have some precious metals that are going to appreciate. This kind of an offer is a real outstanding way to get into it. And
Sure.
I'm finding great enthusiasm that we've been marketing that Walking Liberty half dollar offer for over 2 years now, and it remains a very, very big appeal among my audience.
Yeah, and it is a phenomenal thing. I'm glad you brought that up. For those of you who'd like to learn more about that Walking Liberty half offer or the gold market in general, or receive a copy of our report entitled "The Secret War on Cash," which is free to you. It's complimentary. You just can do that by contacting us at 1-800-289-2646 or visit us online at www.swissamerica.com. You'll find a ton of resources and information there that can help you maybe better understand the market more than you already do, and or maybe offer some perspective that you didn't already have. So, Jerry, I appreciate you being with us today and hope to have you again here real soon.
Always a great
We
pleasure. I really enjoy these. I really enjoy these podcasts. Thank you.
enjoy having you. And the beauty of these podcasts, when it comes to the financial markets and the economy, there's never a shortage of things to talk about, especially in this day and age. So,
And it's
thank
only
you for
going
those
to
of you tuning in.
it's only going to get better from here in terms of precious metals, and people need to educate themselves.
I absolutely agree with you. For those of you tuning in, thank you. If you have not subscribed to our podcast, please do so. Follow us on social media if you're not doing that as well. And we look forward to having you tune in again next time for our next episode of The Secret War on Cash. Have a great rest of your day.